share my screen. Okay.
Welcome to the September RE Broker Group Loan Department Sales Meeting. We want to thank everyone for joining us today. If you have any questions, please enter them into the chat and then will be addressed at the end of the presentation. First off, I want to go ahead and introduce some of our team members. First, we have Dora, she handles all of the loan file review process. And then we have Paige, who handles all of our compliance reporting, as well as if there's any lender requirements, to send those to Paige as well. We do have our guest speaker, Rob Fordham. He's with the Loan Depot. Rob, if you'd like to go ahead and start your presentation.
Yeah, good morning. Thanks for having me. We've been one of your approved lenders for a short time now and looking to give some product to you. Loan Depot, we are, of course, I'm sure you know Loan Depot, we're a wholesale division, separate division of the Loan Depot retail. We do offer a full product mix, which includes jumbo, conventional, FHA, VA, some renovation products as well. So we'll touch on those. I'd like to probably start with our jumbo, given that is our best product right now. It has been our hottest product since jumbo came back earlier this year. We get real aggressive on our jumbo advantage, going down to as low as 660 FICO. We go up to 2 million at 89.99, effectively 90% LTV without mortgage insurance. So it has been a big pickup in any of your counties that are outside the county loan limits. Let's say we're in Southern California. If you're going San Bernardino, Riverside over the conforming limit, we're doing quite a bit of jumbo out there. Other states as well, if you are lending in other states where we're outside the conforming limits. The good thing about jumbo as has come back this year versus where jumbo was previously is it's gotten more aggressive in regards to DTI, going up to 45, where the standard used to be a 43% max. You can see now reserves have definitely lightened up. We only require 6 months PITI reserves on a subject owner OC, 12 if it's an investment property. So pretty aggressive for jumbo when it comes to that. Again, no mortgage insurance. You'll see when you price these, sometimes the high balance conforming doesn't price quite as well as our jumbo. So you may be, let's say we're in Orange County where you could still go up to 800,000+. You could effectively do a jumbo loan on that instead of conventional and get better pricing. So if you're ever running pricing in our engine, you may see that the jumbo does come up in a better price. That is always an option. The good thing about jumbo now too is it's following DU when it comes to income requirements. Used to be the standard was 2 years, 2 years tax returns for self-employed. There was never a caveat for 1 year. Now, when you run DU, you do that on jumbo as well. If it comes back with 1 year, we will allow just the 1 year tax returns on that. And then of course, we still follow the current COVID overlays for self-employed borrowers where you need the 3 months of bank statements, P&Ls, et cetera. But you have a real close mirror to agency guides now on jumbo, which makes it a lot easier. It opens up this product to a lot of borrowers. So you'll see that we're aggressively priced when you're running it in our pricing engine or if you're search pricing engines, but it has been a strong product. Next slide. Conforming, you can see, like most lenders you're going to work with, we have a full conforming conventional suite. We have very few, if any, overlays on conventional. I mean, the few that I could think of as property types, we don't touch manufactured homes, which is not uncommon amongst lenders. But when it comes to following DU or LP or following Fannie or Freddie guidelines, you'll see that we pretty much adhere to those. We offer primarily 30 fixed when it comes to the low rate environment. There are some ARMs, as you can see here, not too many ARMs being closed lately just because of the premiums and how well the 30 fixed are priced. If you're looking for purchase products, we have the Home Ready, Home Possible, and Home One programs. So those are all those are agency products that have reduced MI, a little bit better pricing for first-time home buyers, et cetera. We do have a W-2 only program, which you'll see on the list there is our Select W-2. That's meant for your wage earner borrower, no tax returns needed, no other properties owned. It prices a quarter better in fee than our standard conventional, and those typically move through the system pretty quickly. You should be able to close a full file on that in less than 15 days, less than 10 with a PIW, depending if you need an appraisal. Otherwise, the turn time on that's usually a day or two, and underwriting closing gets to a day from final as well. You can see, I don't know if you guys lend in Texas, I should have asked, but we do have some of the Texas homestead products. Being based in California, we don't do a ton of it here, but it is an option if you've got branches or LOs that are licensed in Texas. Next slide. FHA, again, a full mix there. We, as of yesterday, removed a lot of our overlays on the FHA and the VA, reducing our FICO scores as low as 580 again. We removed a bunch of DTI overlays that I know, especially through COVID last year and capacity constraints, a lot of lenders imposed DTI overlays. So we've seen that go away now. We do quite a bit of VA. My underwriting team specifically has a lot of experience with VA. So if you're working with veterans, VA borrowers, and you have questions or need help with structuring those loans, definitely come to me. I can help you with that. VA borrowers are great referral sources, so you take good care of them. You know, they're first responders, teachers, you name it. You typically get a lot of good referrals if you take care of the veteran borrowers. And I would say of my team's production is probably about 45% VA. Then close second behind that on jumbo. So again, if you're working with VA, have questions on how to structure, let me know. We go all the way up to 2 million, up to 100% LTV. So that's a huge product to be able to go that high with no mortgage insurance and be able to get either a purchase or potentially even a refi for your borrower. When it comes to cash out, your general guideline is 90% on the VA cash out. However, we are one of the few lenders that offers the high LTV cash out, where we go up to 100%, including the funding fee. So you will see that's a different pricing bucket because they're different Ginnie Mae deliveries, the up to 90 versus over 90. But you have an option, whereas if you say your appraisal comes in short, we can still do these high LTV cash outs up to 100%. Next slide. So we're going to just touch briefly on the portal. I know I've spoken with some of the LOs already and give some rundown in the portal. Our portal is pretty straightforward when it comes to a standard flow. You can either just run pricing, if you're looking just to run scenarios and do a quick price, which we can kind of see from the screenshots here. You would put your input parameters. Once they're input parameters, all the eligible products would come up, and you can either select, say you wanted a conforming loan or FHA or jumbo, and then you can pull a full rate stack based on that product. If you wanted to create that loan, you just have the next steps to create a file, create a loan number. You can lock it or you can float. And at that point, you could either just save that loan number and come back to it later that day or within the next few days to go to your disclosures. Just note that if you do create a file by uploading a Fannie Mae 3.4 from your LOS system, and it is a full application, that will stamp in the application date to our portal. So you want to make sure that you're disclosing and issuing disclosures in our portal within 3 days of that date. It'll actually tell you once you've stamped it in that now we have the 5 pieces of information, pencils, the acronym that here's your 1003, we've got an application date, and then it'll give you the date you need to disclose by. So you kind of want to just be cognizant of that if you are creating an app early on, that you want to make sure you get the disclosures out. If you do a quick price and don't include your income and the information that needs to complete a 1003, that would leave the application date free. So you have an open-ended period to disclose your loan. Locking a loan doesn't constitute an application date. A complete application does. So a lot of brokers and LOs will just do a quick price to lock a loan. That way they have several days if they needed to come back to and create your application. One thing, if you're pre-locking with us, we do want to see that the loan is delivered to us within 10 days. So you definitely want to get with your borrower, make sure you have all your income docs, your file submitted, disclosed, and get that in within 10 days. My team starts to bug you a little bit about day 6, day 7, just reminding you, hey, we have a pre-lockout, let's try to get that in. So that way secondary is not beating us up. If you need more time, just communicate and say, hey, borrower's waiting on A, B, and C. We'd rather you submit a complete file than just push something in to make that 10-day deadline. Just let my team know, let myself know, hey, we're working on this, it's coming in, and we'll buy you some more time there. Go ahead, the next slide. So disclosures, so we have 2 options. You can disclose in our portal by effectively, you'll say, yes, please, you want to send disclosure via our portal. You would view all fees. You can actually click one box just to use our basic national title fees, which are generic fees. It's not going to be dialed into the penny, but it does give you open tolerances to just get disclosures out, get the file moving because you wanted to get an appraisal ordered, and then we can button down fees and title escrow fees later when we have a settlement statement. You also have the option to say, I want to enter in my own fees. And if you have a settlement statement from title escrow, you know everything down to, down to the penny. If you want to dial it in, you can do that in our system. Preview the disclosures before you send, just to make sure they're all accurate how you want them, and then you can click send. So everything can be done directly in our portal. Or if you like to just issue your own disclosures in your own LOS system, by all means, we accept those as well. Once you sent disclosures and the borrower's signed disclosures, we'll go to the next step. And again, this really flows in the portal. We know we're going from page to page, but here on the submission disclosure tab, it just goes from top to bottom. Once you've disclosed, now you can go to the next step where you can upload your credit package. Once you see that the borrower has signed disclosures, and it goes to the bottom, it'll say save and submit. That opens up. So if you go to top to bottom in our portal and any of the screens, it's pretty self-explanatory. If something was missing, for example, you didn't complete the anti-steering, you'd have a big red exclamation point that says, hey, you need to go back and you got to touch this. And that's what will open up the button. If you ever have issues, you can always send me an email or give me a call, or I can loop in portal support. They're always readily on hand to help jump in, pinpoint any errors, or even just assist you go through the flow. So we've got some great resources for that as well. Next slide. So it's pretty much a mirror again, whether you wanted to send your own disclosures or use ours. If you did, no thanks, I'll send my own, then it just opens it up and you would upload your disclosure pack with your file. Most brokers are using our portal to disclose. It's got a good tracking system. It sends the emails to the borrowers to be able to consent to receiving electronic disclosures, and it gives them the option at every point to sign the disclosure electronically. So again, it's your choice on how you want to do that. Next slide. So we'll go back. I'll just hit on a couple things that weren't on this, just our flow, our typical flow. You submit a file, you're typically through setup in less than 24 hours. It can be a matter of hours if the file is complete. Underwriting turn times right now depends on product. Standard conventional purchase is a day in underwriting, whereas a jumbo, you may push 2 to 3 days. Refis, you may see the conventional FHA, VA refis be 2 to 3 days, whereas jumbo maybe 4. So still competitive given where we keep our price point. On closing, my closing team is 24 hours or less for docs. One good thing to know is we fund on scan docs, so we don't wet fund per se, but let's say we're just closing in California. As soon as escrow signs a borrower, they can scan us back the email or the scan docs into our portal, and our funders will review those. We don't need the physical docs back to close. So that typically buys you a day or so. Locks, again, the pre-locks I mentioned, within 10 days, we want to see that delivery. When you're locking loans with us, we just need lock coverage to docs out, not funding. So if you're planning on, my close of escrow is in 26 days, or even if it was, let's say it's 35, I wouldn't lock on a 45-day, lock on a 30, because we're likely going to have final and docs out before that 30-day extension or that 30-day lock period's up. So you don't need that extra time. So just always kind of factor that in. If you're kind of wavering between a 30 and a 45-day lock, put that extra eighth in the borrower's pocket as far as lender credit's concerned, because typically you can make those lock periods because we, again, don't need the funding period there. I think that's the basics of it as far as product mix. If you go to our webpage, ldwholesale.com, you have access to all of our matrices. Those that have login to our portal already, when you go in there, you can access our Knowledge Depot, which is our full extended guideline pack. If you have questions or scenarios, I say just email them to me. I know our product mix extremely well, even more so I know what my underwriters like and don't like. So if there's something questionable, I'd rather us talk about it up front and see how we can structure it. That way we're delivering a package that will work and not really have back and forth with underwriting. We want you guys to get clean approvals, have them come out, be able to do a one touch after initial approval, send back for final, and be ready to go. So any questions on the products or flow, just come to me anytime, give me a call, send me an email. I've got a full team behind me that can also assist if I'm in meetings. So we've got some good resources for you.
Excellent. Thank you, Rob. Next up, we have Dora. Dora wanted to go over some information regarding cancel or withdrawn loans.
Hi team, this is Dora. I just wanted to add that Loan Depot offers some really good training sessions. I highly recommend that you enroll to them. They have it every month on Wednesdays usually, so it's a really good tool. So today I want to talk about treat compliance, about cancel and withdrawn loans. They will require denial letters, and they're required for the following scenarios. One is unresponsive potential borrowers, incomplete applications, and borrowers that are unable to qualify after 90 days of initial applications. The files need to be placed in cancel or withdrawn status. Where to get the denial letters? You can get them from CIC if credit has been run, or RE Broker Group if the credit has not been run. The RE Broker Group letter format can be found in the document library. Please create a loan file in our system, upload the denial letter, and place the file in request for cancel. Also, a quick reminder that all of the loan applications are to be started in Blink, okay? And that's all on my end. Thank you for your attention.
Thank you, Dora. I just wanted to add the Blink system and the RE Broker Group system need to be in the same status at all times, because then when we go to do our compliance reporting, we need to make sure that everything's in order. So next page, you want to go in and talk about the guidelines?
Sure. Hi, everyone. This is Paige. I've definitely worked with all of you before. Thank you for attending the webinar. I just wanted to take a quick moment to bring to your attention the new loan processing guidelines. As we update these guidelines, we'll be marking all of the changes on the document in red for a period of time to make you aware of the changes. The mark as read button will not open up again unless there is a drastic change in the document. So please be sure to review the document frequently, just to be sure that you are up to date on our guidelines. Thank you.
Very good. Thank you, team, for all of that great information. Just wanted to reiterate what Dora said. The reminder, all RE Broker Group loans need to be started in the Blink system and then transferred to the lender of choice that has the program that best fits the borrower's needs. We wanted to share with you, there was a potential legal issue that we had on one file, and it was quickly resolved. What happened on this file was it closed recently, and then after it closed, the lender was asking, they found a lease agreement in the file, and they wanted a letter of explanation why the loan was submitted as owner occupied. Well, luckily, the borrower was able to explain that they do live on the property. There's two houses on the property, so they lived in one, rented the other. And so we just want to remind all MLOs that whenever there's a unique situation, to be sure to get a letter of explanation. And then just wanted to commend, I won't mention any names, but this particular MLO did a great job in quickly assisting to resolve that situation. So then the next thing I wanted to discuss is a license renewal. So all of the NMLS licenses do expire on 12/31 of every year. So we're coming up on that. You can start to renew your license as of November 1st. You can be doing your education right now. Once November 1st comes around, you can submit your education verification to the NMLS as well as your payment. It's probably best to do it as soon as possible because we're noticing long delays with the DRE as well as NMLS. So make sure you're doing that on time. The NMLS does require 8 renewal courses where the DRE requires 42. So for instance, myself and the broker, both of our DRE license renewals are coming due. So we were questioning, can you use any of those NMLS license renewal courses towards DRE? Well, we got confirmation from the DRE that no, you cannot. So it's a total, if your DRE and NMLS is due, it's a total of 50 hours that you have to do. And just a reminder, if your license isn't renewed by 12/31, then you cannot conduct any loan origination activity, nor can you be compensated in any way. So make sure you get your license validated before the expiration date. And then